can you believe as an economist in a bull stock market underpinned by revenue growth and earnings growth underpinned by nominal GDP of this America?
Well, I think what we have right now is a pretty interesting tension. I've been calling it the three Ps. On the one hand, we have politics, which is creating problems with the trade conflict.
Mr. Cirilli, yeah.
The other side of the coin is we've got policy, which is supportive and flexible, and it's certainly the Fed and it's certainly the Chinese on that front, and we're seeing spillover to other countries. And then we have positioning, which is, I think, the interesting one, which is for all the talk about an expansion that is 10 years old, for all the talk about a labor market that's tight. As you noted, corporate margins are close to record high levels. Labor costs aren't rising. We've had a recent pickup in productivity growth. The corporate sector, both from its balance sheet, from its profit point of view, and where the credit cycle is not as vulnerable as I think many people actually perceive it to be.
You speak with your team about points of clarity. What are those points of clarity right now?
So I think we have very much unclarity on the tariff side, what's going to happen next in U.S.-China relationships. We clarified at least something temporarily on Mexico. What I think is clear is two things. One is there's a significant drag working through the global economy that's now starting to wash onto the U.S. shores, which has to do to business sentiment, hitting spending, and I think starting to weigh on hiring as well. The second point is the policy response. We see the Fed pivot, and I think it's very clear that if the data continue to soften, and we do expect it to soften in the U.S., the Fed is going to respond by easing. The Chinese are committed to keeping growth somewhere close to 6%, and we can see that spillover again to other central banks and policymakers. So policy is easing, and growth, I think, is going to stay soft here for the next 6 months or so.
Bruce, how quickly can sentiment change if we have a trade deal between the U.S. and China?
Well, I think it can change pretty quickly in financial markets. I think the damage that's been done to business sentiment is more lasting. Remember, what's going on here is businesses are now having to deal with an uncertain environment after having spent the last 25 years expanding their supply chains through North America, through Asia, with the idea that the rules of the game would be stable and would be defended by the U.S. That's not something that changes just because the U.S. and China make a near-term deal. I think on that front, we've done damage, and it will be somewhat lasting.